Crypto is on the rise, making that dough in the crypto paradise. Watching it go, buying low, selling high. Riding the wave, I'm here to stay, living in the digital age. No banks, no fees, just decentralized. It's crypto paradise. Ooh. No banks, no
Alrighty, let's kick this thing off. Good morning from bloody paradise. My name's Crypto Amaru. It is Thursday, February 5th. Joined as always by Nick the Crypto Hitman. Blood in the streets, ladies and gentlemen. Stock market down. Gold, silver down bigly. Crypto 50% off the all-time highs or more. I don't know what the price is now. 69,000 we hit. This is bad all around. But if you're a bull like us, you know things are going to bounce back eventually. And so that's the big question. When will this bloodbath be over? When will we consolidate, stabilize, and start to grind higher back towards all-time highs? It is guaranteed to happen, folks. When it happens, the timeline, well, gosh, that's anyone's guess. This has been not an easy market to predict. Got a great set of stories to cover for you today. Jamie Dimon, the chief of JP Morgan, is saying that Bitcoin's a better play than gold now. Did they crash everything selling paper Bitcoin to then buy the dip and then run it back to $200,000? I've seen that floated around a little bit.
Pretty wild coming from him, because remember, it wasn't all too long ago, just a few months back, he said, oh, we are all in on blockchain technology and stablecoins, but still not Bitcoin or crypto. And now he's saying Bitcoin is a better play than gold here. It's almost like we told you to watch what they're doing, not what they're saying, a long time. And although prices are down now, we said the same thing about JP Morgan when Bitcoin was 16,000, 20,000, 50,000, 60,000, 70,000, on the way to 126,000. Same thing for Ethereum from the $1,000 to the 4,800 that we saw. He was live during those periods saying, nope, yes, blockchain, yes, stablecoins, no Bitcoin, no ETH, no crypto. And now he's here apparently pro Bitcoin versus gold at these levels.
I mean, it's kind of hard to argue with him, though, isn't it? Like, we thought
it was a better value
at gainer in front of us to get back to the all-time high, basically. So, not bad if you think it's getting there. Whereas gold, I know it's off the high, but just barely. So, yeah, obviously Bitcoin's a better play than gold if you're looking to amplify your gains. But, Jamie Dimon, he's a real piece of work, isn't he?
We got Mario Nawfal, crypto crashing, gold and silver crashing, the dollar's crashing, stock market crashing. What the F are we even supposed to buy? Yeah, where's the safe haven? I don't know. Don't know. And that follows into this next one here. Bull theory, absolute bloodbath in the markets in the last 24 hours. Gold dumped 5.5%, wiping out $1.94 trillion in market cap. Remember, that is nearly double the market capitalization of Bitcoin now that Bitcoin's at 70K or whatever we're at. Also, gold is down 27% over the past 10 days. Silver down massively as well. Silver dumped 19% while wiping out $980 billion in market value. That is double the market capitalization of Ethereum in just the last 24 hours. S&P dumped 0.95%, wiping out $580 billion. Nasdaq dumped 2.5%. Russell 2000 dumped 2%. Bitcoin dumped 8%. And the total crypto market dumped 7% while wiping out $184 billion in market value. Nearly $5 trillion was wiped out without any major bad news from all the major markets, the major investable markets, not including, real estate, oil, any of that kind of stuff.
Did my condo in Tulum also crash 50% in value? Who knows? Probably did. Everything's crashing, ladies and gents. But in all seriousness, but first of all, most of these indices were off at all-time highs.
Very true.
Like a week ago. Besides Bitcoin. So look, you're going to have these corrections. You're going to have these red days. It doesn't always have to be news-driven. It can be technical-driven. It can be, who knows, just market overreacting, leverage, options, traders, cascade of liquidations. Who knows? You can't overthink these things. Have a long-term time horizon. So I always say, think about 10 years. Don't think about 10 days from now. And then you start to calm down and chill the F out. We've lived through these countless times. How many corrections have we seen in all these markets over the past 10 years that I've been an investor? You lose count. So, yeah, I don't lose a ton of sleep over it. What does piss me off is Bitcoin breaking down further. We are now 50% off the high. Is this the start of the crypto winter, or we have been in the crypto? We're clearly in a bear market. That's a fact. How long does this last? I don't know. Bitcoin's been highly disappointing, but I guess maybe not a surprise because we never had the liquidity conditions for it to truly run. I think the run was more the result of the ETF buyers and sailors rather than any wider macro forces. So it is what it is, folks. It is what it is. If you sold higher, good for you. If you've held on like I have, grin and bear it. You don't sell at the lows. Try to find income somewhere else so you can sell your investments, and it's all going to be fine. We'll eventually bounce back. But what's your take? Like, crypto winter is now upon us, I guess, or what is it?
This is what we said. This is what we said. Worst case scenario would be a retest of the 2021 cycle high, which was 69 to 70,000. That's where we're sitting now. So, if you don't hold this level, obviously, then there's going to be more doldrum, and maybe Hexbull will be right about 40 to 45K Bitcoin. I know he adjusted it up to 65K, and that's because some of even the most proliferant bears finally got on our side. That worst case scenario would be a retest of these highs. Maybe you see a capitulation wick from that previous high, and that's your last buying opportunity. I don't have it here, but this is actually the most red monthly candles in a row for Bitcoin in history. Yes, more than the last bear market, more than the FTX collapse, more than the future spot ETF top in 2020, and the capitulation all the way from 20,000 to 3,500. More monthly red candles in a row than ever in history. And Bitcoin is here at $70,000, sitting on previous support, our previous all-time highs, which is now serving as support, sitting on the moving averages. So we'll see what happens. And then I also saw that this is the most oversold Bitcoin has been since the FTX crisis as well. And, where does the dumping stop? I don't know. At this point, people are asking like, oh, hindsight, we should have sold higher. Well, yeah, sure. You should have. Oh, hindsight, we should have sold more of this altcoin or more of that. Yeah, you should. What are you going to do now, though? What are you going to do?
Buy, sell, or hold. Those are the three options.
Right. So it's like, I don't know. You can look at the data. You can look at the macros, which are all lining up. You could look up the catch-up trade. Is Bitcoin going to catch up to the NASDAQ? Is Bitcoin going to catch up to gold, catch up to silver like it has historically? Are we going to get more liquidity from the Fed? Are we going to get more liquidity from tax refunds in the next month or two? Are we going to get more liquidity from tariff rebates? All those answers are yes, but it's just a matter of when. And it is crazy to see Bitcoin sell off this hard. We knew if stocks came down, which they have a little bit, it was going to have a challenge. When gold and silver had the massive sell-off, we knew that, hey, that's too fast. Usually Bitcoin follows, and then 8 days later it starts to uptrend, and it just hasn't done that. So who is selling here? I don't know. But let's pull up some things about the whales in the market, because the whales seemingly keep buying. Binance keeps buying. Everybody keeps buying, but retail is dictating the market direction here. Retail is dumping. Whales are buying. Follow the smart money. So, I mean, it's really as simple as that. Whales continue to load up. Number of entities with a balance of greater than 1,000 Bitcoin since the December 2025. So in the past 2 months, 3 months here, has greatly increased while Bitcoin price continues to fall off. So I don't know. I don't know what else to say. It's ugly. The macros point to higher prices, but the current prices are awful. But it is sitting on the previous high of 2021, so this should serve as some form of support, and will be a great area to start the run again. Say, okay, we got the either shortened bear market, if you want to call it, or the bull market is still underway. It bounced off that previous support, and now we are heading higher, just like we have in the past. During the last cycle, we did have that check down back to 20,000, which was the 2017 high, and then we bump and run that towards the run of 269,000. So let's see what happens here moving forward.
I mean, I think the bull case is what you just described. Liquidity's coming back. If we are going to get Fed rate cuts, we'll probably get into the story about the job market looking terrible as we predicted. Inflation, we know, is falling off a cliff. Hasn't yet shown up in the Fed data. It will. The Fed's going to step in, help out a little bit. We got all the Trump various tax returns, tariff rebates, whatever you want to call that, coming into effect. Eventually, I think this clarity bill gets passed. Who knows? Maybe the market crash helps bring the parties together. Like the crypto side is like, all right, fine. Fuck it. We don't need interest on stable coins. Just pass the bill so we can save the market.
Right. So who retails? Yeah.
Yeah. Who knows? Our retail user base is fled to the hills, so we need to pass this thing. Who knows, guys? But there's enough positive things coming. I think so. That's the bull case. The bear case is, yeah. I mean, this 4-year cycle was a real thing. Happened again. You got plenty of people saying that. Benjamin Cowan. I mean, he's dancing on our graves. He's so happy right now. Chart doesn't lie. History always repeats itself. Okay, maybe. That would then indicate we are in for further downside and then also a very long, drawn-out consolidation period. That's what happens in the crypto winters usually, right? I don't know. I don't think that's in the cards for us this time. I just think we get a bounce here at some point. It looks like Hex Bull. He's come around. He's bullish again. Bull market to resume. Look at that. A resident bear turning bullish right at the lows. How interesting.
There we go. We got AJ West in the building saying good morning. Let's go. Got to buy when it hurts the most, not when easy at all-time highs. Martin Max King says hello. Rag you dad 6422. Crypto winter has arrived. If that's the case, then we do have about a year left of prolonged down to sideways, probably back to 40 to 45,000 Bitcoin if it's going to repeat the other 4-year cycles that we've had. Martin Max King says, hey, more red candles. At least there's some positivity here on the show. The Wise Tent, good morning, boys. And then, of course, you already mentioned Hex Bull. Here is kind of what you're talking about. Will the crypto industry capitulate and just try to get this crypto market structure bill done? It needs to be done by Q1 2026. Something needs to save these markets. Holy cow. Just in, crypto industry proposes expanded community bank involvement in stablecoin infrastructure to break deadlock on market structure bill per Bloomberg. That would be interesting. I guess they're assuming that community banks would side on the side of the crypto market participants rather than the big banks because they're kind of playing at a disadvantage versus the national banks as well. What are your thoughts there? It's interesting that the crypto industry is the one proposing this and not the other conglomerate massive banks that we see here in the United States.
It's consistent with the reporting that I've been following on the Clarity Act, which is the crypto industry is more willing to come to the table and negotiate than seemingly the banks are. So we'll see when the impasse breaks. We'll see who capitulates, Blake's first. I do think the bill eventually gets done. The concern I have now, actually, are these damn Democrats who, instead of being concerned about illegal immigrants stealing billions and billions of dollars from tax-paying Americans, are concerned that Trump got Trump's, I guess, meme coin or crypto company, which he doesn't even own, by the way, got an investment from the United Arab Emirates. And then something happened later. The Emirates got some kind of deal. I don't know. They're claiming corruption. This crypto industry and the whole topic of crypto has become ultra politicized because of Trump's involvement, for better or worse. And then the Democrats' reaction to that, because everything Trump done horrible, must fight tooth and nail. Trump-like equals bad. We all hate it. And so here we are, the Democrats basically now trying to hold things up, trying to come after Trump for a foreign country investing in not even his company, but his kid's company. A little strange.
Oh, always going to find something there, I guess. They got to have something to bitch about. That's the crazy thing here. Now, there is extreme fear in the markets. We see extreme price depreciations in the market as well. But this goes back to the thing of institutional investors are still holding or buying more. Whales are buying more. So who is actually selling? Extreme fear is spreading. Here are some solid facts. U.S. ETFs held 1,362,293 Bitcoin on 10/10. That was the day of the liquidation crisis. The price is down 44% in that time period till now, but the holdings are only down 6.6%. These guys are serious holders. This is exactly what we've been saying. First of all, ETF investors are built different. They're investing in ETFs as a small percentage of their portfolio for long-term holdings. Number two, they are programmed to have these long-term holdings, add on to them as diversifiers, very wealthy individuals who are trying to get involved in the new speculative asset or a new market class to outperform. And then, of course, there's institutions themselves who will hold in these ETFs for the broader exposure for their company or whatever it may be. And we said they were going to be long-term holders, and here's the proof in the pudding. The day of 10/10, the liquidity crisis occurred. You were already off the all-time highs there. Bitcoin has fallen another 44%, maybe 47% now, yet holdings are only down 6.6%, telling you that most of the people in here are just simply holding or buying more or just waiting to weather the storm, using this as a 1 to 5% portfolio diversifier and not seeing it as a trading opportunity. So we were dead right with the ETFs. We were dead right with the institutions, dead right with the macros coming into play, yet price is somehow going down.
Shout out to the boomers. Thank you guys for being diamond hands. Maybe you millennials and Gen Z could learn from your parents. Stop panic selling the dip, you Jeets. Good job. Good job, Mom. Good job, Dad. Hodling onto your Bitcoin via your ETF. So good work there. Yeah, I guess I'm not surprised. I'm sure their financial advisors, for the most part, explain, look, this is a very volatile asset class. But if you hold for X amount of years, we expect your returns to be 50%, 100%, whatever, which is going to outperform the rest of your portfolio. But you're going to have to weather some of the volatility. And so the boomers, I guess, took that to heart and they're hodling on. Good for them. I read an interesting take yesterday. It's from an institutional finance guy. He was suggesting that a lot of the breakdown in price is the result of all the exotic derivatives, options, leverage trading that has now entered the picture. Even ETFs has entered the picture in the past few years in the crypto markets, likening it to what happened with gold and silver when all those exotic instruments came online, and Wall Street was basically able to suppress the price, long, short, wreck everyone. Do it. They make money in numerous ways. But what it came down to, his take, is that one Bitcoin used to be one Bitcoin. The finite supply, that was the heart of the investment thesis. But now one Bitcoin can represent like 6 different instruments. And what does that then do to the market performance, especially when you got thin order books, low.
Yeah, and that's why we thought it was very important that the ETFs were spot ETFs. Futures aren't great. We saw that at the top of 2020, and we just had an announcement of the new Ethereum derivative product. And it's like, we want spot Ethereum. We want you to either go buy Ethereum and put it in a DeFi wallet, go buy Ethereum or Bitcoin and hold it on Coinbase, go buy a Bitcoin ETF, which is a spot ETF, go buy an Ethereum ETF, which is a spot ETF. Not all these 3x leverage this, derivative that, future this, short call that, call option here. It's like, when you add all that stuff, you do lose the finite supply aspect of it. Now, in most of those scenarios, they do hold spot to offset that, but now they're not incentivized for price to go higher. They're incentivized just to do short-term day trading and make money on either side of the trade. They don't really care about the asset anymore, which is kind of what we've been seeing.
Yeah, I guess at some point, though, pressure builds, retail comes back, liquidity will come back, and there will be enough spot buying to offset the leverage traders, etc. That's my take anyway. I mean, they couldn't keep the lid on gold forever. That eventually broke out. Same thing with silver. So if you buy into that narrative, you have to come to the conclusion that, yes, that may be what's going on in the here and now, but that does not mean this condition will persist forever.
We got Crypto Durgan saying, morning, gents. Moonmut in the house. Good morning for my friends. Always good stuff here. Appreciate you. And then, of course, we got Miko Chapo saying good morning as well. People still tuning in. Even though we got a bloodbath, we do see that there's 34,000 on Mauro Nufo's live show, or Spaces. Of course, some of those are bots, but they're talking about Trump and other political stuff there. Randy Hipper is still live in the doldrums of the red. We're live in the doldrums of the red. It does not look like Bitcoin Ben is live today. He took a day off watching that Bitcoin price slide away. We got Cassian here. One thing that really stands out right now, crypto markets are extremely shallow. If you're a Bitcoin, Ethereum, MicroStrategy, BMNR investor, read on. Order book depth is within 2% of spot for Bitcoin and ETH, is thin by historical standards. It only takes $260 million in net flow to move price 2% up or 2% down. That explains why price action feels fragile and emotional. Small sellers can push markets down hard. We are seeing that how the retail is panic selling right now while the whales are buying up the supply, yet price continues to meander lower. But the same lack of depth means small buyers can push them up just as fast. This is exactly why you should expect high short-term volatility here and why trying to trade every move is so hard. But it's also why these environments create asymmetric. What is that word right now?
Asymmetric.
That's what I thought. Asymmetric setups, shallow markets amplify fear, and they amplify reversals. As the saying goes, bull markets have the most violent corrections, bear markets have the most violent rallies. Understanding the structure matters more than reacting to the candles. A good chance for Fundstrat to hit his 5% goal very soon. This is a good point. We kind of talked about what would an $800 million buy from Binance do, and based off these numbers, that would create somewhere around a 6 to 8% rally in Bitcoin if they did do that. Probably more if they fat-fingered it due to how thin the order books are, and you need bots to backfill those sells to fill their buys. But, I mean, this isn't anything crazy or mind-blowing, but it is good to remind yourself that when order books are thin, and you see this on microcaps all the time, when you see it on DeFi platforms, you need to break up orders. Otherwise, you are going to have a massive impact on price. And right now, there's a lot of fear in the open markets, and maybe that's how Bitcoin price is still going down, because we do see the big buys out of MicroStrategy, the big buys out of Binance, the big buys out of other ETF institutional players, but we're not keeping track of all the $500,000, $10,000, $50,000 sells as retail continues to panic out.
Especially true when you consider the fact that those big buys are normally not happening on the open order books on the centralized exchanges. They're happening through over-the-counter desks, OTC desks, private buyers coming together, whether that's the miners directly selling, whether that's the likes of Galaxy Digital, who sells on behalf of big players to, Michael Saylor, etc. And I'm sure that's how Binance ultimately has bought their, 200 million of Bitcoin as well. So you haven't seen on the order books. I don't know. I just think further evidence that, yes, the market can go down abruptly and violently as it has over the past week, but it can also go up abruptly and violently, as I think it's going to happen when the conditions allow for it. So buy, hold, or sell, guys. Those are your choices. I've made my bed. I'm laying in my bed, my holding bed. It hurts. I looked at the portfolio yesterday. I had almost a heart attack. But it is what it is. I mean, we've lived through this before. I remember, this honestly reminds me, at least the feelings, maybe not the narrative. This reminds me of the tariff crash last April. I mean, we all thought everything was going to shit, it's going to zero, and the stock market got hit horribly then, too. This was not even just a crypto thing. The FUD was out in full force. Was Saylor going to get liquidated? I mean, it's all the same shit. The only now we got the Epstein FUD. That's new. But outside, it's the same. Everyone's panicking. It's going to zero, blah, blah. And then eventually that moment passes. Markets resume their grind up. I expect the same thing to happen here. My portfolio will be saved, hopefully within the next 3 to 6 months.
Yeah, this was the tariff crash. Everything's going to zero. Holy cow, stock's going to zero. Now this is the current crash. Oh my gosh, everything's going to zero. Stock's going to zero. And look where you are relative to it. That's not to say that NASDAQ can't go lower, guys. It's just to say that you got a lot of support levels on the way back to where we were earlier, less than a year ago. And we predicted new all-time highs for NASDAQ and all stock industries by the end of the year, which is exactly what happened. Unfortunately, Bitcoin got there, but it only got to 126. Ethereum didn't even get there. So how are your altcoins going to perform if Ethereum, the second largest crypto asset, couldn't even get to all-time highs? That's what we fell into, unfortunately. You do see this still could be a high-level consolidation as long as NASDAQ holds on this moving average and stays higher than $24,000 or 24,000. If this gives away, you are going to probably steeply correct because you got a moving average giving away and that previous low giving away. You're going to quickly go somewhere between 22 to 23,000 on NASDAQ, which probably would not be good for Bitcoin. And maybe that's how you get a break below the 69 to 70,000, which is the previous high, last cycle's high for Bitcoin. Let's not see that happen. Let's let this be a high-level consolidation. Everybody's panicking right now, and let's kind of break up into the upside on NASDAQ. Have gold and silver go sideways to lower, and finally have Bitcoin and Ethereum play catch-up. That isn't to say it's going to happen, but there is a possibility. It doesn't feel good. Here's gold. Had the massive sell-off. We said somewhere it needs to be a bounce. We said it right around here when I made my silver post. We did have the bounce, and now we are starting to consolidate. Does gold rip and roar to a new high? I highly doubt it. It would be nice if we just fell in this channel and just kind of meandered for 3 to 4 months, because last time that happened, Bitcoin caught a bid, Ethereum headed towards the 48 to 5,000 mark towards its previous all-time high, and we were all happy, hunky-dory, and actually able to make some money in the crypto markets. Meanwhile, this is the price action for gold and very similar price action to silver, except very much weaker. Look at silver. Silver at $78. It's a time for a bounce. It rallied up to $92 overnight. And holy cow, today all the way back to 75. So silver is underperforming gold in a big way here, catching a lot of retail investors along that asset from these higher heady highs.
Jeez, hope no one got caught up in this silver trade buying the top, because that looks brutal. What makes crypto look like child's play. But I want to give a shout out real quick, and then I'll give you my take on what you just mentioned. Moonbot asking about the spaces. We are not doing a spaces today. I will be at the eye doctor dealing with my eye problem. If you have a 3-year-old at home, word to the wise, keep them away from the eyes. They are liable to poke you randomly. So yeah, shout out to all the parents out there. I forgot what I was going to say as to your take, so maybe we'll just move on. Oh, here's what I was going to say. I don't think we're going to break down on the NASDAQ to the extent you said. The only reason why I could see that happening would be if we actually like go to war with Iran. And then you get like a black swan. If we start shooting missiles off, the markets are gonna nuke for at least a temporary period of time. There's no doubt about that. So let's hope that that does not happen. I think the more likely outcome here, maybe we can pull up the job numbers that I had shared over, is we get a Fed that capitulates. Fed blinks first. Looking at these terrible job numbers that came in, inflation is going to be trending down. They should have cut the rates in January. They held pat to wait and see which side was going to break first. Are we going to get random inflation to reignite out of nowhere? Or was the trend on the labor market going to continue to go down? Well, guess what happened? The labor market got weaker. Not a surprise. It looks like, by the way, AI has taken about 7%, or is accounting for 7% of these job losses. That's just going to accelerate. So yeah, I think Fed blinks. I think Fed cuts rates. Maybe they restart QE to some degree, and we only have until May before Kevin Warsh is in, and he's absolutely going to be dovish. I have no doubt about that in my mind. So yeah, I know everyone's scared looking at these job numbers. You really should be happy because I think it's going to force the Fed's hands to ease further.
Yeah, we got the job numbers here. We also have the inflation data saying that we are down lower than what we were on the last one. And then let's look at Polymarket. I don't think there's a chance of a rate cut this month, but there is a chance early March 17th. Does the Fed decide to cut rates then? I mean, the job market numbers show they should. The inflation shows they should. Other things going on show they should, but we'll see. They didn't do it. They held pat in January. There's no meeting in February. We have a meeting in March, a meeting at the end of April, and then a new Fed probably in May, and then the first meeting with the new Fed would be June 16th. Let's see how this goes, and we need to get not just the short-term rates going down, but we need these long-term rates to go down as well. And I don't know if you saw it. It was a crazy idea that Trump had to try to make credit cards go to 10% interest rates from their 29, 30% that they have right now. Well, it was just about a week ago, maybe a few days ago, I saw Bernie Sanders came out with the same thesis that credit card interest rates should be capped at 10%. So, although it's not the most important thing, it is nice to see some crossing of the line, some embracement and bipartisanism from one of the leading Democrats and Trump himself, at least agreeing on something when it comes to interest rates on credit card debt.
Yeah, I always respect when someone who's political adversary of Trump decides to agree with him. I think we got to have more of that. Like, I really like this Fetterman guy. He's a Democrat, but he'll be like, yeah, Trump's right on this, and he's wrong on that. Why can't more people be like that?
Yeah, Fetterman's been pretty open about the ICE stuff, saying, hey, ICE has been going on forever. They're doing their job. They're deporting people, which is a mandate from the citizens, and that's what we need to do. Now, do they need to make sure to do it with caution, whatever it is? He's like, yeah, they do, but also you guys blocking streets makes it a lot harder to do that job with caution.
Yeah, I'm saying, so, like, why can't there be reasonable middle ground takes? It's like, a lot of people in this country are nuts, but in any event, I think that Polymarket bet's a good bet for a rate cut. If we assume that the Fed isn't completely cherry picking data, and they are calling balls and strikes as they should, we know they're on a lag on the inflation data, but that stuff really did fall off a cliff. There's no doubt about that. So they should start seeing those numbers picking up in the next CPI report, the next PCE, the other data they look at. And then you add the fact that the job market is really struggling right now. I think they end up cutting rates. And they said, by the way, Powell said in the last meeting, it's not as if they're against cutting rates. They're in wait and see mode, wait for more data, and then make a decision. And if that's true, the data's telling cut the rate.
Yeah, we talked about the headwinds on why they would wait and see, just from everything from the Supreme Court ruling over the tariffs and the other stuff that was going on, and not having all the full data picture, and that's kind of what they did. They held pat. But, we talked about the job numbers. Here's the Truflation data showing U.S. CPI now close to a percentage. U.S. core CPI 1.32%, PCE 1.29%, U.S. core PCE 1.48%, falling off an absolute cliff. Usually they have a 45-day lag for the Fed, which means that these numbers isn't what they're going to see here in the next month, but they will see the numbers where we saw it when it was between 1.8 to 2.2%, which is going to be much lower than their 3 that they were showing on their last reading and where they held pat. So we'll see what happens when you pair this inflation or deflation numbers with the job numbers and everything else that's going on. Plus, kind of they had that dovish spin to their hold pat last meeting. I mean, if they don't resume cutting rates in March, I think that is a big miss. Not just us saying that here, but a lot of other, people that are way smarter than us are saying the same thing. And like I said, unless it's purely politics, I don't see how they can just sit on their hands for another month.
The other thing that I think leads to a cut, if we see continued weakness in the markets, like if we don't get a V-shaped recovery, if it's still kind of trending down, bearishness, red over the next month, the Fed claims they do not look at the market, and maybe they don't look explicitly. They're not like market down, therefore we cut rates. But you better believe they look at the market in as much as the wealth effect is a real thing, meaning a lot of this economy is actually driven by high earners who own a lot of assets. But if my assets are down and trending down, I'm not going to go out and buy that new car. I'm not going to do that remodel on the house. I'm not going to buy my wife a new this or that because I feel poorer. So it all connects together. It all affects everything else. So they might not look at the markets in as we look at them, but the market's weakness is another factor. So I think 90% no change is way too high. Looking at Polymarket.
I'd probably agree with you there. And even on the 3 previous cuts, Polymarket was the same way. I mean, it was a month beforehand. It was still in the 90s of percent. And then the day before is when it really flipped. So, I mean, if you've been a bettor on interest rate cuts and you did it all 4 times, you were ahead because you had a 90% against you on the 3 cuts that occurred. And then you had 90% against you on the one that did not occur last time, which you would have lost. But you would have won 3 out of the past 4. And you would have been on the side of the 10% or less, which is much better odds of payouts.
This is what Trump needs to do. He needs to not talk about the Fed at all for the next
do his thing. Yeah.
Next 4 to 6 weeks until the meeting, right? You already nominated Kevin Warsh. We know Powell's a lame duck. There's a lot of chatter out there that this was this no cut on January was a reasserting the Fed's independence kind of no cut. Because Trump had been pressuring so much, he sued Lisa Cook, coming after Powell for criminally for mismanaging the renovation, which is such a bogus thing. Don't talk about the Fed at all for 4 to 6 weeks, right, until the meeting. Then they won't have that, we have to reassert independence. And then they'll just do the right thing. So yeah, Trump, if you're listening, just lay off the Fed. You already got Kevin Warsh coming. Powell's done soon. Just calm down and let them do their thing.
Dovacan says we need to distract him with something. Yeah, that'd be nice. And also,
not Iran, though.
Not Iran.
No wars,
not Iran.
please.
No wars.
Fucking hell.
We don't want to beat a dead horse today. The markets are red. We talked about Bitcoin price, Ethereum price, gold, silver, as well as the NASDAQ. We hit up some news stories, primarily ones that were actually bullish for crypto and the inflation data and jobs data that could affect the Fed's decision to cut rates. Now, there is one more thing here. Crypto Paradise still active in red candles. That isn't fun, and we've been wrong in the short term here with prices of Bitcoin and Ethereum as we look for higher prices to continue in a green 2026. And so far, it has been anything but green for 2026, at least so far. We're only in February. But somebody else who is still active in the doldrums while his chain is at or near all-time lows. Richard Hart just posted at 6 a.m. Today is Pulse Chain's 1,000th day of flawless operations. No nodes desyncing, no shutdowns like Solana, just running away, even though it's red candles and not many people are there to play. It is running flawlessly for 1,000 days.
Happy to see that.
Bittersweet post.
Happy to see that. I mean, look, dude, if you're a founder out here, you can't hide and cower just because the market is not going the direction you want it to. Get out there. Post. Inspire confidence. Build. I mean, look, positive. Here's a positive take on the market crash here. Just like all the other market crashes, there is a positive spin, which is it clears out a lot of the dead weight, clears out a lot of the leverage, clears out a lot of the dead projects that should have just never existed in the first place. All those Solana memes, they should go to zero. Clear all that out. It's like a wildfire in the forest, right? Things start to get overgrown, too much underbrush. You get a lightning strike, the whole place burns down, and it can regrow again without a bunch of that nonsense. Same thing happens in these crypto bear markets, guys. So if you're looking for a positive spin, a lot of the tourists are gone, a lot of the ship projects are gone, a lot of the leverage is gone. This is the opportunity to eventually rebuild and regrow from here.
Talking about another founder, Charles Hoskinson, I think it was about a month ago, we were live on the show. He said he was done with Twitter and he was having a public meltdown, crashing out because of the lack of adoption of the Crypto Clarity Act, saying that the crypto president hasn't followed through. The crypto czar is really the one to blame, not Trump himself. And talking about how he's not going to be on Twitter anymore because people call him fat, ugly, stupid, and his asset is a scam. And he crashed out. But he's been back, and he's been back with a vengeance, doing a ton of posts, doing a bunch of live shows, launching a privacy coin on Cardano's blockchain. And now he is talking about, as of 2 hours ago, all right, Cardano, meme coin, NFT, and culture projects. Reply to this post with your documentation. It's time for Logan, the exit liquidity lobster, to get to know about you. So I don't know what's going on here, but he is active again. He's trying to spur the trenches, and he is not giving up on crypto like a month ago he was, crashing out, giving up on the space, giving up on anything. Obviously, he probably looked at his portfolio and had a heart attack as well. I also did see a clip of his last live show talking about how he's going to go back to the cyberpunk, back to his roots, and less about material items and more about changing the world. He had in his background empty shelves, I guess signifying that he's selling a lot of his assets, keeping his farm, keeping his land, keeping his llamas, but all the other material possessions, he's really letting them go. And is that because crypto is way down and you have way less income? Probably. But also I think it's a mental thing because he had a public breakdown as somebody who is very wealthy, the leader of not only Ethereum but also ADA. And now seemingly he is back as well. I guess he figured it out like we did. Look, it's red. What are you going to do now? You can either keep evangelizing, keep utilizing, keep investing, and just go through the struggle, eat some ramen, or you could crash out, sell it all, walk away. But then the last decade of your life was all for naught.
If you like Charles Hoskinson becoming a minimalist, well, you should love Crypto Paradise because we own nothing. We own nothing, guys. We are dead broke. I'm just kidding. We're okay. It could be worse. It could be a lot worse, although my portfolio is ultra wrecked, but it's fine. Yeah, man. Look, you shouldn't go anywhere. What are you doing? Like, don't even. Why have a meltdown? What are you fucking doing, man? Get your shit together. First of all, you're a billionaire. Stop whining. Second of all, you are the public face of a top 10 blockchain. Despite the fact it shouldn't be a top 10 blockchain, it is miraculously still within the top 10 or 15, which is actually quite the milestone because it's been there for ages. You got to instill confidence, man. None of this crashing out BS. So I don't know. You got to pet your llama, have an orgy. I don't know, but get your shit together, and I'm happy that you did. Look, this is time to dig in deep, guys. It's not time to crash out. It's all going to be fine. How many times have we lived through these crashes, man? So many. If you guys complain about this, imagine how I felt back in 2018. Knew really nothing about the industry, total newbie. Bought the top of Bitcoin, like 17K, right? I had been buying in earlier too, but like I think my last buy was like 17K. Bitcoin, right? FOMO'd in during that run up in December. Just to watch it crash over the course of the following year down to $3,000. And not only that, decide to get involved in the trenches, which at the time was like Binance, and getting wrecked over there. So, basically for a year, lost 80% of my investment on my Bitcoin. Absolutely got wrecked and scammed in the trenches. I could have given up. Nick, you were there too. You could have given up. You could have crashed out. Instead, decided to dig in deeper. Decided to actually learn about the industry, figure it out, make some connections, try to build a business in the Web3 space. I mean, the rest is history. So that's your choice, guys. You crash out, quit now. But I tell you, you'll regret that in a couple of years once the market's ripping and roaring again. You've missed out on massive gains because you left at the bear market.
Yeah, Bitcoin sitting down here right around $68,500, a little bit off the low that we saw at 68,000 even. But man, that is an ugly chart. The most red candles, monthly red candles in a row for Bitcoin in the history of Bitcoin. It is still a miracle, even though we say that. It's still at 70,000, 69,000, the previous cycle's high. This would be a great place to bump and run, have that V-shaped recovery, get all the bears who thought we were in starting the bear market and we're going to 40K, and you have a year here to kind of buy the dips to leave them behind. But I don't know what is going to make that happen. It could be the measured move of this breakdown, this bear flag that we saw. It could be that previous support. It could be the oversold RSI technometer. It could be liquidity conditions changing and liquidity coming back in the markets to save this. But man, not fun. Very ugly. Ever since that October 10th liquidity crisis, we have not had very much relief. We did have that fallout to 80,000, and we ran all the way back up to 98,000. Things felt pretty good. A breakout was occurring in January 13th. It's crazy that was only 3 weeks ago. 98,000 Bitcoin. Ethereum above 3,000. Pulse Chain having a 40% rally, leading to Surf and PTGC having 60% rallies. And it's given it all back.
Amazing how quickly things can turn in crypto, but remember, they can turn to the upside just as quickly too. So when that happens, that's anyone's guess. I would have loved to see 69 hold. That is disappointing because that was obviously the previous cycle top. And I know 68.5 is we're basically there, but not great at all. Look, we may be in for a long, drawn-out winter. Who knows, guys? We'll still be here. We ain't going anywhere. We are not going anywhere. And I will say this, too, about the winters. You can actually make money in the crypto winter in altcoins. Some of our best investments of recent note, and these are now going back 2 or 3 years, but think about like DeadPrez, ChainGPT. Think about, there was one called DexCheck. A number of investments we made into pre-sales back in, this was like 2022 or early 23. Crypto winter times, if you look at the Bitcoin chart anyway. So remember, Bitcoin, yes, it does dictate alts to a large degree, but not entirely. So you can still find outperformance. You can still find opportunities, investor-friendly deals. I know we got one going on at Pools coming up with the Chimpex project. If you're interested in refundable IDOs, risk-free investments, not a bad idea in the bear market. So not all is lost. You can still find opportunities. You got to be smart. You probably can't hodl on too long. If you're in profits, remember to take them. But not all is lost. Not all hope is lost, even if we are entering a crypto winter, which, by the way, I don't think we are. I don't think we are. I think we are going to get a recovery here. I don't think it's going to be a year long. I mean, we've already been in, 5-6 month bear market? 5-6 month bear market since October?
Yeah, October. That's what, yeah.
Yeah.
So October 10th, November 10th, December 10th, January 10th. You're at you're pushing on the 4 months here in 5 days. In 5 days, we'll have 4 months of down, most red, weekly and monthly candles in Bitcoin history, with us sitting here at previous highs, 69, 68, $70,000.
Crazy, dude. Just crazy. We'll get to it.
Yeah, I mean, we covered a lot, but I don't want to just sit here and beat a dead horse during the red. I guess we'll, stay tuned on the Twitter channels, whether our personal ones and Crypto Paradise. If you're in the Surf DAO, be in the Telegram, and we'll be as active as we can. We got Quant's launch coming up here. We got the Chimp raise for Pools, and we got Richard Hart posting about Pulse Chain, 1,000 days of uptime. That's always nice to see.
Yeah, hold on. Quant's just announced
February
the actual 10th. Launch.
Yeah, I think February 10th, because that's when the exchanges are on board for the launch as well.
Wait, you sure it was February 10th?
I thought that's what it said.
Hold on. Okay, no, wait. Yeah, February 10th, TGE. Mark your calendar. They publicly announced it finally. I know they were toying with the 5th, which would have been today. I'm actually very glad they didn't do it today, because you do not want to launch.
You're gonna weed through all the headline news. It's gonna be hard.
Yeah, no. I don't mind launching in bearish conditions, but not on capitulation days. That's never good. So glad they extended it out 5 days. Hopefully, we'll have found a floor at some. I mean, at some point, this market has to find a floor.
I know that Bitcoin is at the back to the level of when Trump actually won his presidency, which is interesting. Obviously, we ran because people. It was in July when he went to the Bitcoin conference, and people were understanding. Oh my God, he's going to embrace it. We're going to try to get Trump to win. Polls had him winning, so we did run from like 50 to 70 before the election. But we're back to where we were when he actually won the election in November. Before we went on the run to break 100,000 for the first time. So maybe that's another.
Yeah, I saw that too. I mean, and people are, I guess, kind of suggesting that Trump is responsible for this bloodbath and stuff like that, and I don't buy into that at all. I mean, I think Trump has done everything he can to help the industry. Obviously, the Trump meme coin was bad. Okay, let's be honest about that. But I think everything else. I mean, the Bitcoin Strategic Reserve, calling off the dogs of the SEC so they stop suing everybody. Pardoning CZ in retrospect was probably bad.
if finance is to blame, yeah.
He served a sentence, right? And so he was going to be free regardless. I think he only had, it was only a 4-month sentence anyway. So
and they made up give up his CEO role. He's not CEO of Binance anymore.
Yeah, but that's we can debate.
That's on paper. That's on paper. Yeah.
Yeah, exactly. So in any event, for the most part, outside of the Trump meme coin, I think Trump's been good for this industry. You can't blame him for the crash.
Right.
In my opinion. I think there's just so many forces and factors going into the market and the prices. Impossible to blame one person. I think it's a low IQ take to say, oh, this is all Trump's fault. Could he do more? Maybe. Let's try to get this Clarity Act signed. I'd love to see the Strategic Reserve start buying Bitcoin. I did see, I'll leave you guys a little hopium. I stumbled upon this X account. This guy was hilarious, man. Kind of reminded me of Crypto Paradise. I think he lives in like Hawaii. I think he's like a crypto Bitcoin OG. He's got a lot of money. And his theory was basically that this is all being engineered by the masters of the universe, the big financial institutions, the Federal Reserves around the world, to basically run up gold, suppress Bitcoin, and then do like a switcheroo.
Well, the switcheroo's coming. JP Morgan switcherooing already.
Yeah, look at that. JP Morgan just did a switcheroo. Switcheroo, like U.S. sells a bunch of its gold and adopts like the Bitcoin standard instead of gold as like the store of value around the world to fuck the Chinese and basically like reassert our dominance.
Well, I was saying that in the last live show. It wouldn't be funny if Trump came out and was like, "Oh, we sold $5 trillion worth of gold and paid off some national debt and bought more Bitcoin." That would be interesting. That would be, would it happen? I don't know, but we'll see where we stand here. That's funny that other people are talking about it, whether you're joking about it or not. You're still putting it out there in the universe, and we'll see how all the cookie crumbles here. Not fun at all here. I got to go sell some candy bars on the corner to pay my electric bill this month because I don't want to sell Bitcoin or Ethereum at these prices.
Yeah, and that is the problem. If you've been a hodler as I have, cash flow's low because you're working in Web3. Not a super fun place to be by any means, and this has been going on for way too long. But it's possible that a lot of this was kind of engineered and price being suppressed by the powers that be are selling paper Bitcoin, and they're going to drive out retail. They're going to buy up on the lows and then run the price back up. That's basically what this guy was saying. It's a lot of people are saying. There's probably some truth to it.
Yeah.
Probably some truth to it. All I know is this. We will eventually find a bottom. We will either have a V-shaped recovery, fingers crossed, or a long drawn-out consolidation, followed by resumption of higher. So hopefully your time horizon is long. Hopefully you've adopted patience as your mantra, as I have many years ago, and you'll be able to weather this storm like you have the other ones.
I think that's a good place to end it. Make sure to watch that replay. A little bit shorter, maybe 10 minutes shorter than normal. I thought it would be even shorter because what are you going to do? Beat a dead horse here. But that's all I got. And I got that, just finished my cup of coffee. So I got to get running if you know what I mean.
All right, let's get this guy running. We'll talk to you guys tomorrow. Until then.